Okay, you're at the end of the accounting cycle, so we need to remember some of the things that we did in accounting at the end of the accounting cycle. One thing that you can do is you can go to Reports, Accountant and Taxes, and print out your trial balance for the month or period that it has ended. Remember rule number 1 in accounting, debits must equal credits. But in this case, using QuickBooks, we don't have to write out every account, put each account in the debit or credit column, and then total it all up. It's automatically done for you, so that's nice. The next thing that you need to deal with is that you need to put in any adjusting entries. You do adjusting entries for supplies that are used up during the period, insurance that is used up, depreciation, etc. To do your adjusting entries, you will actually make them in the general journal, so it's going to look a lot more like accounting. Go to Company, make general journal entries. Okay, and then you put the date that you are making the adjustments. And then let's say we used up supplies, so that is going to be some kind of supplies expense account. So we will choose this office supplies expense account to be debited. And then you can put a memo in the memo field. The credited account is going to be an asset, your supplies account asset, so we'll choose that. And then you would hit Save and Close. Save and New if you're going to enter another adjustment. Let's do one more adjustment for insurance. So we are going to choose the insurance expense account to be debited, and we type in the debited amount, and then we will credit the prepaid insurance asset account. So insurance expense is increasing, the asset prepaid insurance is decreasing, and we'll hit Save and Close on that. The other step that you need to complete when completing the final steps in the accounting cycle is to produce your financial statements. So we'll look at just two of them. We can go to Company and Financial, and we can go to the Profit and Loss report, and all you need to do is run the report for the entire period, and everything is automatically calculated for you. You have your income at the top, you have your cost of goods sold subtracted from your income, your revenue, and then you have gross profit. You have your expenses. They are categorized into different categories, and then you have your total expenses subtracted from gross profit, which gives you your net income, and then you have any other incomes and expenses subtracted or added to get your final net income total here. And notice this is a net loss. The other report that's important to print out and look at is, of course, the balance sheet. So you will choose the ending date for the balance sheet, which is the end of the period, and then you have all of your assets listed. They are categorized, and then you have your total current assets. You have your fixed assets with accumulated depreciation applied, and then you have your total assets, and then you list your liabilities and your other liabilities, and you have your long-term liabilities, and then you have total liabilities, then you have your owner's equity. And notice that assets must equal liabilities plus owner's equity on the balance sheet. The good thing about this in QuickBooks is that you are not creating these statements. They are automatically created for you. And then the last thing to do is to close. Now in paper and pen accounting, you had to actually manually go and close every revenue and expense account into the income summary account. Then you closed the income summary account into capital. Then you closed the drawing account into capital. But in QuickBooks, you don't have to do any of that. All you need to do in QuickBooks is to set a closing date. So you go to Company, Set Closing Date. Click Accounting on the left, and then Company Preferences tab. Notice you have this Set Date Password button. You hit that. You set the closing date, and then you can also put a password on it. Now, setting the closing date will prevent users from entering transactions that are prior to this closing date. So if you want to make it really secure, you may want to put a password in there. So I'm going to type 123 as the password and click OK. Alright, then I'm going to click OK. So now the books are closed. Nothing can be entered that will affect anything prior to that closing date. So I'm going to try to create an invoice here. And I'm just going to pick anybody and pick some stuff here. And then notice I'm going to choose a date prior to closing. We're going to put that on the 26th. Now here's where the warning comes up. It says that this is going to affect a closed period, and you would actually have to put in the password if you did want to make this change, and you would have to know the password. So I'm going to hit cancel there because we do not want to enter a transaction once the period has been closed. Okay, so that's your end of period procedures. A lot easier in QuickBooks than it was in paper and pen accounting.